Where there is risk, there is fragility, and where there is fragility, there will be failure. Today we will discuss how a stock market glitch shut down trading. You came here for the truth, so let me unveil that for you. Let's get into this today, break it down very simply. Want to go over these points quickly. Let's look at the Dow Jones at around 17,500, and we see what can happen in a very quick moment. There was a glitch that unfortunately shut down the trading, and many traders were not too happy. Let's get into this here out of Reuters. The New York Stock Exchange was forced to suspend trading for several hours on Wednesday in the biggest outage to hit a U.S. financial market in nearly 2 years. Unnerving investors are already rattled by the meltdown in Chinese stocks and the Greek debt crisis. So you just keep piling it on because there is one crisis after another, and when it gets too much to handle, you eventually have a crash. This happened to be a technical glitch. Let's get into that here. NYSE said the outage was due to an internal technical issue and not the result of a cyber attack. Other exchanges were trading fine. So they're going ahead and saying, this is not a terrorist activity. This is just simply a computer glitch. This has happened before, and in fact, happens regularly now. Why? Because the market is no longer controlled by individual people. It's all computers. But I'll get into that more in a moment. I just want to bring you back into the pages of history. You can search the country you're from, perhaps the city, and look at the different stock exchanges that have experienced the same issue, and that is software glitches. Singapore Stock Exchange down due to software glitch. This happens to be from 2014, but again, it is a repeating policy that is consistently occurring all around the world. Software glitches causing big problems. Then you have this out of the NYSE. Just after 8 a.m., the NYSE put out an alert about a reported issue with a gateway connection affecting certain symbols. They noticed it at 10:37 in the morning. Right here, we opened the market as usual. All the NYSE listed stocks opened without incident. Around mid-morning, we started to see some concern about the way trading was occurring. Customers weren't getting all of their message back that you would otherwise expect. So here they are, they open up the markets, and next thing you know, people aren't able to trade. So what does that mean for your money that's in these stocks, or your money that's in these accounts that are connected to these stock markets? Well, in this case here, it was resolved rather quickly. But what if it took 3 days? What if it took 7 days or more? Or perhaps something else happens to the accounts where a portion of the money disappears for whatever reason, whether that's a software glitch, which has happened to people's bank accounts before. I've covered it here, where you see the money return to zero. And then, of course, the bank believes, at least for that period of time, that that is an accurate number. But what do you do with your savings? What if you have to buy groceries? What do you have to buy emergency supplies for whatever reason? Well, you can't get your money out. This is one of the big concerns about having your money in paper investments, that you're basically putting all your trust into these companies, but not even the loyalty that that company has. They could be an honest and loyal company. What if there's a glitch that erases your wealth? These are things that never get talked about in the financial media, and of course, most of the time, even in the alternative news as well. Very important things to note. Why we need to realize that, sure, you know what, if you want to invest in paper assets, do so with caution. Do so with knowledge, but understand the risks involved. That's what's important. Look at this here. Back in 2010, we had this flash crash of the Dow on May 6th, 2010. And you can see the chart for yourself, how sharply it begins to drop, and then it comes up right away. And, I'll discuss in a moment why this was the case. But this right here is not by accident. This is intentional. And I believe what happens with these software glitches is often testing. They're testing the markets to see how they react. I'm not saying this happens in all cases. I'm not saying that this necessarily happened on these episodes. I can't prove that. What I'm saying is I believe that this could be a testing phase. They do this with the military exercises, and we know that specifically that they do test the public in many regards when they have their black choppers running through and the media covers it and says everything's just fine. There's no difference between that and the stock market. They want to see, will people begin to panic? What will the markets react to in this case? So we have this here. They said it was one individual who caused the market to crash 1,000 points. Personally, I don't believe that for a second. They have to pinpoint it. They have to say it's one lone individual. Perhaps I would suggest that it's not one individual, but one algorithm. And as soon as you trip one algorithm, they're all programmed at the same, let's say computations, and they all began to trip each other out, finding its way down 1,000 points before somebody figured it all out and brought that back up to normal. This doesn't happen with individual human investors doing this. It happens much more gradually, not 1,000 points in a day. It does not occur like that. But again, here we are. Let's move on to what I wrote about in my book. We got this chart here. And what I wanted to say from this was that this is a 25-year loss. And we're looking at the Great Depression. Stocks purchased before the crash were at a loss for decades. You need to understand that if the market does crash, it doesn't necessarily come back up very quickly. If you think about what could happen to your money if you do not invest in real assets, you need to understand that, look, if you want to leave your money in there for 100 years and perhaps it will be worth more one day, that's fine. But understand that if you put your money in today and tomorrow it drops by 50%, is that worth it for you? You need to understand the risks involved. That's all I'm trying to point out in today's video. Then you look at Apple. Everyone believes that Apple is the fail-safe. Apple will make money for everybody for all time. It is the greatest stock. As long as you put your money into it, you'll make money. It's the greatest company on the face of the earth. Blah, blah, blah. Apple investors see $69 billion vanish. Shares of the gadget maker closed down 2.5% amid a volatile day. Shares have slid nearly 9% from their all-time high of 134 set on April 28th. So understand that this volatility is not something that is rare. You saw the stock rise incredibly, and corrections are definitely healthy. I do believe that for the stock market as well. But you're pumping up the stock market with all the QE. And what happens, what I have found historically anyway, is that as there is more volatility, as there are more crises forming in different countries or different sectors of the stock market, you basically have more money funneled into those deemed safe. In the financial crisis, even after the housing was starting to tank and a lot of the other stock markets and the stocks began to tank, you found technology stocks still began to rise. Apple was one of those, Google was another one, and money began to flood into those. But really all that was happening was they were buying themselves some time before they pulled out and the market entirely began to sink. And we will see this undoubtedly occur again and again in different markets and around the world, and this is no different right now. Look at this here. Speaking of the Federal Reserve, speaking of QE, what we have right now is the scenario that everyone in the financial industry and all of the markets which are connected in with that are basically going ahead and talking about the Federal Reserve's rate hike. If they increase interest rates, all of basically the world is interconnected in with that. Everyone is waiting for the Federal Reserve to raise rates. Initially, they were saying beginning of 2015, they would raise rates. Then it was the first half of 2015. Then it was the summer of 2015. Now it's become September of 2015. But here we are, again, out of CNBC. The dicey situation in Greece may provide the Federal Reserve with yet another reason to hold off on hiking rates. According to the minutes of the Fed's June meeting, which they were supposed to increase rates in the first place, showed that the debt crisis in Greece unmistakably weighed on policymakers' mind. Several mentioned their uncertainty about whether Greece and its official creditors would reach an agreement. Whenever there's concern, they have this ability to basically say, no, we're not going to increase the rates, and that keeps the market going. If they say specifically that we will print money, markets will increase. If they say specifically that don't worry, we're going to keep rates low, they don't even have to do any of these things. As long as they say that in their meetings, the market will continue to rise. If they do get a bailout, something that I will have to talk about in a future video, perhaps in my next video here, but if they do go ahead and bail out Greece right now, what we do have is a situation where the markets will rise. And we know that perhaps the euro-US dollar ratio will come apart right there because they were starting to get very close to each other. So we could see some things happening right here. To me, the euro should actually weaken in this scenario because they're basically willing to do whatever it takes. There's an extreme level of moral hazard. This is the last thing I want to discuss for this video as we look into what is happening with China. In my previous video, which I'm sure you've watched, about China, we could see the stock market declining rapidly, well over 20%. And this has become a big problem for China, and we see the real economy suffering badly. This is a video that I did 1 year ago approximately, 9 reasons why China's economy will crash. That was a year ago, and in the bottom right corner of this screen, you will see a significant amount of people gave a thumbs down. I normally don't get this many thumbs down on these type of videos, so it's very interesting that whenever you talk about the negativity about China, then you have a very big problem where people are basically putting a lot of their investment into China, and that's specifically why they're worried. They have a lot of investment with China. They don't want to see their money declining. But 1 year ago, I said it was going to happen. Today, as of this video, the market has tanked significantly over these past couple months here. This is not the only crash they're going to face. This is not the deepest part of this correction. They will, in fact, rise above this. I believe that's wholeheartedly. But they're going to have bumps along the way. You need to understand that. No market is impervious to any crashes. That's ridiculous. What they had to do was immediately print money and buy up shares in order to get this to happen, to be okay. So this is really how it all works. The real economies around the world are dead, and we are basically being funded by bailout strategies and QE strategies, low interest rates, in order to support this. I hope you enjoyed this video today. If you did, please give me a thumbs up. If you want to know how to support me, give me a thumbs up. Comment on the videos. Just say thank you. Just say hello. Just say anything. That supports me. It basically, every thumbs up and every comment that you give me, it brings my videos up higher in YouTube. They become ranked higher, and essentially that will help me out very much as I can spread the word further and further. We are now at over 23,000 subscribers. I want to say hello to every single one of you. If you're new on here, you can always email me at david@themoneygps.com. I reply to every single one of my emails. I can't always reply to all the comments, and definitely I just checked Facebook after a few months. I haven't logged in over there, and I noticed there's a whole bunch of people who have messaged me on there, and I quite frankly just don't have the time to get to everybody. So what I'm going to do is I'm going to make a video replying to everybody from my Facebook page. So I'll try to get to you guys on there. It is very, very difficult to get to all of those, but surely, slowly but surely, I will. Last but not least, if you found this video informative, I know you'll find my book, The Money GPS, even more informative. And you can actually flip through the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the book and see if you like it. Take care.